Welcome back. Well, let's focus on the stock of the last couple of sessions. Today as well, Sula's high, even yesterday's trading session did quite well. Remember, they came out with an operational update and the street likes it quite a bit. We are currently joined by Mr. Rajeev Samant, the MD and the Chief Executive Officer of the company. Hi, good morning. Thanks so much for joining in. Well, let's focus on a couple of points.
Hi, morning.
We have your quarter 3 numbers and they're looking quite good and the street is clearly excited. Safe to assume now that we'll end this year with a growth of closer around 30% on the top line. And if you could break that up for us, how much of it is volume-led, how much of it is price-led?
So growth in Q3 and in our 9 months to date has been very strong. The entire year is looking like it's going to be a strong, solid year. And, this is what we've been talking about, that wine is a growth story. Wine is here. We are not here to compete with whiskey. A lot of people say, but India is a whiskey drinking country. And that is not what we are talking about. We are not looking to, touch the levels of whiskey anytime soon. But in terms of growth, we are seeing growth much higher than spirits and beer. That's what the story that we are talking about. And we see that continuing, and we see Sula continuing to lead that. So Q3 was strong. It was our highest quarterly revenues ever. So we have now left the pandemic nicely behind, and we are trading these days the kinds of revenues that we are seeing are higher than pre-pandemic.
All right, Rajeev, so you're clearly sounding quite optimistic on business. Consumption story, at least in the business that you're dealing in, seems to be pretty good. But Rajeev, give us a number. What's the growth outlook from here on and the rough margin band we should be looking at?
So I'm sure you're aware that I can't give you a projection for the year end, but I would say that the Q3 results are pretty much in line with what our expectations are moving forward. And you're not totally out of the ballpark. You have said a 30% growth for the year. I'm not going to commit to that, but definitely very strong growth over FY22. And we don't see any headwinds. So we have a great harvest coming up. It's already begun, looking really strong in terms of quantity and quality. Here in India, we have been really lucky in terms of climate conditions, global warming. This is going to be our fourth record harvest in terms of quantity and quality in a row. So that bodes really well for the year and the 2 years ahead as well.
Rajeev, hi, good morning. Is there scope to improve your gross margins further? I'm asking because, there's a graph on the screen which is indicating that, of course, FY20 was not a comparable year, but from sub 50% gross margins, you've now gone to 70% plus. Is there scope to improve it further? If yes, how?
So I think already we've seen significant growth, as you've pointed out, 70% gross margin. At this point, I must say that it's not necessarily a priority, the top priority for the company to improve it further, because at 70% gross margin, we're throwing out cash. We're in a very comfortable position. We now want to plow that cash back into growing the business, into penetrating wine into tier 2 cities. Until now, wine has been very much a metro game, a few tier 1 cities. We want to take this magical liquid, what we call it, out to tier 2 India, and we want to spend money in penetrating that market for growth to come 2 or 3 years down the road. I think I'm very comfortable with a 70% gross margin at this point.
Rajeev, hi, good morning. And that makes sense, right? So you want to go down the price curve, not high. I'm assuming from here, if you want a greater acceptance, greater penetration, etc. On the season, the harvest season, that runs for you from December to March, right?
Yeah, that's right. Significantly January to March.
January to March. And that's looking solid. I mean, no problems at all.
Looking very solid. No problem at all. It's an agricultural crop at the end of the day. So we always factor in that, there's a 2%, 5% wobble here and there. But looking at it from a historic point of view, a very solid harvest.
What about the other? I think you were asked this during the time of the IPO as well. Imported wines, right, which make up I think 20% of the total wine sold here. But these FTAs, for example, with Australia, agreement to lower these import duties over a period of a number of years, of course, not happening immediately. Do you see? Do you sort of assess that as significant competition down the line?
So the Australia FTA has already been signed, and we are very comfortable with the outcome of that. We do believe the Indian government is definitely looking out for farmers, for Indian farmers, and is not going to sell Indian farmers down the road. So while there have been concessions, those concessions have mostly come at the higher end of the price spectrum. And, you can say that 95% of the Indian wine business is not impacted by those price reductions. What's going to happen is that some of the most expensive and iconic Australian wines are going to become significantly cheaper. But, from the consumer's point of view, what it's going to mean is a 5,000 rupee wine on the retail shelf might become a 4,000 rupee wine. But you should know that 95% of the Indian wine business at this point occurs below a price point of 2,500 rupees. And Sula, of course, is by far and ahead the market leader in those price points.
Always great to hear if wine gets cheaper, right? It's great for the consumer. But Rajeev, you've said in the past that you're looking to sort of move up in that value chain. You're looking for 2,000 rupees plus category as well. How many launches are you planning in that segment? And what would that take your sort of revenue contribution to in the premium category?
So, in the last couple of years, our premium category, I would say 700 rupees and above, and especially 1,000 rupees and above, has grown much faster than the more popular wines. Having said that, Q3 saw strong growth across categories. I should point out that our cheapest wine in Mumbai is as low as 260 rupees. Our most expensive own brand wine is just a shade under 2,000 rupees. We saw strong growth across that. But from a management point of view, we are very focused on wines above 700 rupees and especially above 1,000 rupees. We are by far and ahead the market leaders there. As you go up the price ladder, Sula's market share starts to go up and up. There's a lot of competition, of course, at 260, 300, up to 500 rupees, a lot of competition, fair amount of discounting, decent margins, but nothing like the margins that we get from 1,000 rupee plus point. So that is very exciting. We've already had a very cool launch about 6 months ago. Our Moscato, India's first Moscato, already sold out the first vintage. This is a wine we have great hopes for across the country. At this point, I can't really speak about upcoming wine launches.
I think the pandemic changed wine drinking habits as well. I mean, actually, at least around me, I've noticed a pandemic of wine drinking, which has been incredible. Rajeev,
the whole home delivery thing has also made it so much easier. There's a lot of people, and especially a lot of our consumers are women. So this is not your dad's generation liquid where, the elder guys would be on one corner of the room all drinking their whiskey. Wine is for the new generation. It's something that's enjoyed by women and men. And you are going to see it more and more as the taboos among women drinking start to go away, which is happening more and more in India. You're going to see more and more wine.
Got that. I have one question, and that's, been on my mind for a while. At the time of the IPO, if you had analyzed the preceding 5 to 6 years, there was absolutely no growth in Sula's earnings. It's just in the last, say, about 1 to 2 years that you've started to show some serious growth. Why is that?
So, you have to slice and dice the way those numbers played out. We had a big emphasis on our imported brands. That was a much larger part of our portfolio. So our traded goods was something like 30% of our turnover a couple years ago. And really, that portfolio was making hardly any money. We had taken a stake in a distribution business in Mumbai. That turned out to be not a great decision. So coming through the pandemic and coming out of it, we are focusing on our own brands and our wine tourism. These are our biggest pillars, and we are doing that with a huge focus on sustainability. So, our cost structure has been getting better and better, and we've realized that that's where the money is, in creating your own brands. Sula knows how to do that. We have mastered that. We've shown we are successful again and again. Sula Vineyards is today the most loved homegrown consumer brand, one of the most loved, and especially in Alcobev. We've done that. So we're going to concentrate on that, and I think you're going to see maybe even better times ahead.
All right, Rajeev, pleasure speaking with you. Thank you very much. Appreciate you joining in here on CNBC-TV18. Thanks indeed.
Thanks so much.
Sula stock's doing very well. Yesterday, Quant Mutual Fund bought 10 lakh shares. The stock was limit up in a trade yesterday. It's doing well today as well. On to our special segment, Quarter Se Quarter Tak. Nigel is standing by on the big wall to take us through expectations from the cement sector this quarter. Nigel, over to you.
Well, thanks a lot for that. For the cement space, brokerages are expecting